Let me introduce our next speaker. He is currently the director of Atram Group and the president of the Philippine Investment Funds Association. He has almost 30 years of experience in banking, asset management, and private equity. He was also the former president of the Fund Managers Association of the Philippines way back in 2011 and 2012. Prior to his position in Atram, he held various senior positions in ING Investment Management. Ladies and gentlemen, let me introduce to you Mr. Mike Ferrer.
Good morning, everyone. Thankfully, I'm from the Philippines, so I don't have to impress you with my Tagalog. I will do this completely in English. And I'm here today to talk about the mutual fund industry and to give you an update on what's happening in the industry. But I'd like to start with a why. Why are you here today? And why did you get up early in the morning on a Saturday to come here and attend this event? And of course, I think this is going to be a great event. The food is going to be fantastic, I'm sure. You're going to be learning a lot from the fund managers that you're going to be listening to today. Sorry, I'm going ahead of myself. And as you saw from Mark's presentation earlier, things are going to be getting quite technical and quite, you might have an information overload. So it's important, I think, to ask yourself really, why are you here? And I am told that most of you here are already investing in mutual funds or are thinking about investing in mutual funds. And you are in the industry, what we call the enlightened ones already. And as enlightened ones, I'm sure you're not just investing for the sake of investing. You're investing for a reason, to meet certain goals. And some of you have short-term goals. I guess the millennials here in the crowd love to travel, and therefore they're investing funds to travel maybe in a year's time. Some of you are looking a bit far ahead, looking to buy that car that you want, so you're saving for, let's say, a 5-year time horizon. And others are looking at that property or that condo that you want to buy in 10 years. And, it could be a number of reasons, but I'd like to focus on the one goal that binds us all together here, and that's retirement, which was mentioned a little bit earlier. All of us are going to retire someday, whether we like it or not. Once you hit a certain age, say the age of 60, the company that you're working for going to thank you for your years of service, but it's time to retire already by then. Or if you have a business, maybe for health reasons or whatever, you may no longer have the energy to continue working. So you will have to retire. And the question that we all have to ask ourselves really is that, will we be ready to retire by the time we reach that age of retirement? And so, what are your sources of, retirement, to set up that retirement fund in the Philippines? And here are some typical sources of retirement funds in the Philippines. Again, we have a unique pension system here, unlike in other countries in the West or around Asia. So in the Philippines, you've got your SSS and Pag-ibig, which I'm sure you're all familiar with. But how many people here believe that they can retire with SSS and Pag-ibig? I think there's one hand there. So if you can live on 5,000 to 7,000 a month, pesos, then I think you're okay. Another is your corporate pension. This is basically the retirement fund. If you work in a company, by law, they're required to pay you retirement. However, unless you work for that company for a long time, and unless the company has a generous retirement package, it's unlikely that that will be enough to fund your retirement. Because by law, the company is only required to pay you around 1 month for every year of service, and you have to work there for a long time to be able to get a decent retirement. So most, if not all of us in the Philippines, really will have to rely on our personal savings to be able to retire well. And here, I just want to present an equation, a retirement equation, which really puts in simple terms and gives you some sort of a framework to figure out whether you're going to be able to retire well or not. And the way we've done this is really to convert retirement into years of retirement. It's a very simple formula. If you look at it, the number of years that you work or earn an income multiplied by the percent that you save of your salary or your income, so that's clear, divided by RLF. Now what's RLF? RLF is your retirement lifestyle factor. In simple terms, it's your retirement lifestyle in terms of the expenses that you will have and the costs versus your pre-retirement living standard or expenses. And the expectation is that once you retire, your expenses will go down. Why? Because you no longer have to spend on gas and parking to go to work, have meals out, buy expensive office clothes. The flip side, though, is maybe during retirement you want to travel more, so you might be spending a little bit more on travel. But the important thing, or in general, your lifestyle should come down once you retire. So with that, you should be able to compute how many years you can retire. And let's take an example, a typical example. You start work in your 20s, you work for 40 years, retire at 60 or 65, and then assume you save 10% of your salary or your income for retirement. And mind you, this is just for retirement, not for the other goals that you have and that you're investing or saving for. And then assume that you're able to cut down your expenses by 50%. Now, I know that's a big thing to ask for once you retire. But, for the sake of an example, let's assume you can do that. And with that, you can see here that you can retire for 8 years, which is not bad. If you die within the 8 years, you're okay. No problem. But the problem is, on average, if you retire at 60, you're going to live another 15 years or more, which is a good thing. And therefore, even though you run down your retirement fund, you're not going to be able to, you'll have to rely on other things to survive, family, etc. So what can you do? Quite simple. You can work longer, you can save more, or you can reduce your lifestyle or your expenses on retirement. None of this looks too attractive. And so the obvious thing that you could do other than that is to invest your savings well. No? Because an important assumption in this simple equation is that your savings is being invested at the same return as inflation or income inflation, if we can call it that. So that line there shows you the equation I showed you with the examples, and it's a straight line and allows you to retire in 8 years if long-term inflation is at 4% and you're able to invest at 4% per annum as well. However, if you're able to invest even at 1% per annum more or better than the long-term inflation rate, you're able to extend your retirement by at least 2 years. So from 8, you go to 9.8 roughly. And if you're able to even do better and invest and beat the inflation by about 3% per annum, your retirement years are extended to about 15 years. Now, you know why, right? I mean, you're all enlightened, and this is the power of compounding, really. And it's possible to do even better than this, as some of the numbers you've seen earlier show. So that's really what it's about, being able to invest your savings better than the inflation rate. And that's where mutual funds come in. And let me just give you a quick update on where the mutual fund industry is today. Here you see the assets under management, or the amount of money that's invested in mutual funds. And it's grown over the years at a very, very good rate. Today we're at about 300 billion pesos in assets under management. It's growing both because there are new money invested into funds, but also because of market appreciation. Next, you see how investors are investing their money, in aggregate at least, the asset allocation of all investors. And you'll see here that still a good chunk is invested in fixed income and even money market. You see the jump in money market last year as people moved their money from deposits to a money market fund, which actually is good. They're earning a bit more on a money market fund. But the amount invested in equities and balanced funds has been growing, for equities in particular, but still at about half the industry today. In terms of the products available in the market, we now have about 60 mutual funds crossing across the different asset classes, from money market, bonds, balance, and equity. And now we also have a few global funds, or dollar-denominated mutual funds. In terms of the number of accounts, and this is something that we in the industry have been monitoring closely, it's been growing as well. So we're now close to, this is in thousands, close to 400,000 investors, the enlightened ones like you guys. But in the scheme of things, we think that this is still a very low number. Less than, with a population of over 100 million, or even just the working population, this is less than 1%, which is really frustrating for us in the industry, because if you look at Bitcoin, for example, which hasn't been around that long, according to data and statistics, there's about 2 million people who already put their money in Bitcoin in the last year or so. Whereas for mutual funds, over so many decades, we've gotten to 400,000 only. And the problem partly has been regulations. So in the industry, we've been working very hard to change the regulations, improve them, and make it easier and better for you to invest. So I'm happy to report that late last year, the SEC came up with new rules and regulations for mutual funds, which will, I think, help the promotion of funds among the investing public. And I just want to focus on the 3 most important changes in the rules that will, I think, impact the investing, public investing. So the first is lowering the minimum investment amount for mutual funds. So as you all know, in the past, the minimums have been at around 5,000 or 1,000 for additional investments. Under the new rules, actually 100 is not the lowest that you can have. It's up to the fund house to come up with what its minimum is. And if you're able to distribute funds through online channels like COL, it might even be possible to lower that. Now, that's, I think, very important for the broader public, the new investors in the market who maybe can invest 100 pesos a week or a day, which is really the perfect way for them to start investing in funds. The second is the introduction of what's known as feeder funds or fund of funds. And really this is targeted at allowing investors to invest abroad in the global markets, as what Mark presented earlier. The feeder fund, in simple terms, is really a local mutual fund that is investing in an offshore fund somewhere abroad. So through the feeder funds, you'll be able to invest in global equities, US equities, European equities, emerging markets, etc. So this is a very important development, particularly to provide, for you to be able to invest in those companies like Facebook, etc., which today might be hard to access. And then last, and this one I admit can get quite confusing, is that mutual funds, apart from being able to issue shares, will now be able to issue units, similar to other products in the market like the UITF and VUL. Now, without going into too much detail on that, I think the important thing is that this has the potential of lowering costs for you or for the fund, which in turn would help increase the returns to the investors. So those are the three key developments. And I guess the question now with respect to retirement is, how do you make use of all these products in the market and these new developments to be able to invest for retirement? And here I just wanted to show how investors are investing their money. And here we have the net inflows into the equity funds, and overlaid we have the chart of the index, the PSEI. And I don't know if it's that obvious from this chart, but what investors are doing or tend to do is really to chase performance. So they look at when, after the market has had a very strong run, you see the biggest inflows into equity funds. But once you see a correction, perhaps like what we're seeing now, investors tend to get gun shy and they stop investing. Same thing with the bond market. This is the bond market. So, interest rates were going down for a long time. People were chasing that, and now that interest rates are going up, you see a lot of outflows. And yet, when you look at the returns of funds over a long period of time, the last 10 to 15 years, the returns have been great, even considering the 2008 financial crisis. So equity funds, this is mainly Philippine equity funds, have given you 10 to 15% over the last 10 to 15 years. And balance funds have given you between 8 to 12%, clearly beating the inflation hurdle that we talked about earlier for retirement investing. And so, I guess to sum it all up and put it all together, mutual funds can provide an ideal vehicle for retirement savings and investing. But maybe there are three simple rules that I would try to leave with you today. And first is really to try to match your investment strategy with the time horizon, because all of us are in different stages towards retirement. And yes, if you're young, you have 40 years ahead of you, equities is the best place to put your money and in your savings, retirement savings. As you get older, you probably have to adjust your asset allocation and dial down the risk as you approach retirement. The second is to diversify, both locally, by asset class when you have to, and even by manager. So it's not bad to have several managers in your portfolio, several fund houses, because you're diversifying sort of manager style there. No? But more importantly, with the feeder funds, you can now diversify globally and be able to not only invest in those tech and other healthcare companies that you don't have here, but it really reduces risks over time. They say diversification is the only free lunch you'll get in investments. And finally, just the discipline of investing regularly through the cycles and not be too influenced by the gyrations and the volatility of the market. So I guess I'd like to end similar to Dino with a quote from Warren Buffett. And basically he likens your retirement fund to the tree and the shade that we will all need when we come to retirement, especially in a country like the Philippines, which is so hot. So we do need that shade. And I think if you follow those rules, mutual funds can certainly provide you with the ideal vehicles for retirement savings. So on behalf of PIFA, the fund industry, and all the fund houses there, I'd just like to assure you that we are doing all we can to improve the products that we sell, the standards, in order for you to be able to invest in mutual funds to meet your different goals, including retirement. So thank you very much.